Okay, I'm going to go with this one, which is finance requires a huge amount of math and understanding of math. And I think that is 100% incorrect. I maybe do math 3 times a week. I have Excel that does math for me. All of my work is thinking through a business, understanding all the components that come together, and giving decision support to clients, to CEOs, and helping them guide them in their decision making. And so I think when I was in 6th grade, I failed a placement test for math. So I ended up in advanced math because my mom knew I was bad at test taking. But at the same time, I was never this math genius. So you can't, I think people correlate that and then they just shut down. And I think when you see the kind of creative side of it, it just becomes a much more approachable industry.
Hey everyone, this is Devin Miller here with another episode of The Inventive Expert. I'm your host, Devin Miller, the serial entrepreneur that's grown several startups into 7- and 8-figure businesses, as well as a founder and CEO of Miller IP Law, where he helps startups and small businesses with their patents and trademarks. If you ever need help with yours, just go to strategymeeting.com, grab some time with us to chat, and we're always here to help. Now, today we've got another great guest on the podcast, Natalie Cook. And today with Natalie, we're going to be talking about a few different things. So talking a little bit about strategic thinking and the plan before modeling and analyzing finances, looking at the picture as a whole, especially when you're looking at business finances, and then also how to go about simplifying the language of finances. May even talk a little bit about setting up a virtual business and how to do it, and then establishing relationships of trust when you're bringing on CFOs, especially if they're virtual, and maybe even hit on a little bit of financial mistakes people often will make. So with that much as an introduction, welcome on the podcast, Natalie.
Thanks so much for having me, Devin.
Hey, excited to have you here and looking forward to a great conversation. So I just kind of gave a quick run through to quite a few fun or hopefully fun areas and topics of expertise on your end. But maybe for those that haven't caught your inventive journey episode, and as a quick reminder to everybody, so Natalie was on the sister podcast, The Inventive Journey. So if you haven't had a chance to go catch your episode there, definitely encourage you to do so. But maybe for the audience that either hasn't had time or just saying, hey, we just want a quick intro to Natalie, give us kind of a couple-minute overview as to who Natalie is and introduce yourself to the audience.
Yeah, so I'm Natalie Cook. I'm the CEO and founder of Copper8 Strategies. It's a virtual CFO firm that supports businesses between $1 million and up to $30 million in annual revenue. We really focus on forward-looking strategy. So we do not do bookkeeping or tax accounting, but we will help get that set up. And our expertise is really coming in and diving into your business strategy, understanding all the various components, and then helping you move to meet your goals.
Awesome. Well, definitely a great walkthrough, and certainly an area that I think a lot of people either dislike, struggle with, or otherwise are looking for assistance on. So with that, kicking off, and it's always kind of fun. I'm going to take one of the last things first, and then we'll dive into a bit more. But, one of the things I think people always learn a lot from is the mistakes. And when you get into finance, certainly the same thing. Of a lot of times when you're looking at what are some of the mistakes that others have made that I can avoid to make sure my business avoids those and gets going right out of the chute. So when you're looking kind of at the financial or construct, and whether it's you don't have a CFO or you have a CFO, but kind of looking at finances with regards to business, what are often some of the mistakes people tend to make or starting out?
Yeah, I see a lot of overspending when it comes to the little things that are just shiny and new. So you think of like all the software products you can buy for your business, those actually add up way faster than people realize, because it's, oh, this is $15 a seat. Well, okay, but you have 5 different products that are $15 a seat, and suddenly you're paying $1,000 a month that you just weren't planning on or paying attention to. So that's one of the biggest ones, is just not realizing those little tiny costs that over a period of time grow. that can be really inhibitive of adding new employees too, because you don't realize that there's additional costs beyond just salary and benefits.
No, I think that makes sense. And that's kind of, I said, but it's their model, right? So it's kind of the same. I almost feel the same way when I'm looking at all the streaming subscriptions. It's like, okay, we cut the cord. We're no longer having to pay all for all the channels. And then we end up having 3 or 4 different streaming services. And it's pretty much the same amount as what we paid before, but it feels like we're getting a good deal. And kind of that same thing with businesses and software subscription is that, it's a little bit of the death by 1,000 cuts of, hey, these are all inexpensive on their own or less expensive. And then you add more seats and you add more people and you add more different platforms, and it tends to add up. So I think that's a great one to hit on. Other ones, anything else that are big mistakes people make? And I know one that we talked about a little bit before sometimes is when you're looking for hiring, looking at senior versus junior positions and how that can be or impact the business and finances. But any thoughts on that?
Yeah. So the other thing exactly to that point is people tend to think, oh, when I'm starting, I'm just going to get lower cost employees. A lot of times that means more junior, less experienced. And then therefore it actually adds cost because they're taking more time to do the tasks that maybe a more experienced person wouldn't. So I've seen this happen a lot with virtual assistants, where it's great to hire a virtual assistant, you usually need it. But if you're hiring someone who's new to that role and you have to train them, but you're also trying to grow your business, you might spend double the amount of time trying to get someone up to speed. So you really have to balance that. What's the fit and what amount of time am I going to dedicate to an employee to get them up to speed versus sometimes you just need an expert to come in and do the thing without training, which I think is actually a great reason why you would hire a fractional CFO versus hiring a full-time CFO, because you don't have to do the training. We're already trained and we're going to come in with expertise. And that carries over to any type of role. You can make different decisions based on the needs and the ability to invest in those employees.
No, it makes perfect sense. Now, if I were to play the devil's advocate slightly, as you hit on, you're saying, yeah, I'd love to have somebody that's more experienced and that can make more money and, or they can get things done quicker that actually saves me money. On the other hand, I just can't afford their salary. Now, for some of them, as you mentioned, fractional CFOs, and it seems like, there are some other fractional services that are out there, but other positions, it's hard to find somebody that has the experience that you can afford. So in that point, when you're kind of between that rock and a hard place, how do you make the decision? Do you go with the more senior person that you don't really have the budget for, or the junior person that you really don't have the time and or maybe even the experience and the skill set to train? Any thoughts?
I think you go with what's going to fit in the long term. So I would look at culture fit and attitude. You can train a lot of skills if you're willing to put in the time. Not all businesses can support that. So that's where you want to go the fractional. But if your business can support it, I would go for the long-term play of getting the right attitude, the right person who's going to be loyal to the business, because that's just going to give you more cash in the long run. It's very costly to turn over employees.
No, and I agree. And that's one thing I think when you get started, and especially if you're just starting out in a business, you don't often think about the turnover because they know if this doesn't work out, I'll just find someone else and hire them. And you have the time sink of you have to go through the hiring process or interviewing process, identify them even before that, posting the position. Then you have to bring them onboard them, get them all done. And then if they leave, you have to do it all over, and it can be a major time drain. So I think that's a great takeaway as well.
Yeah. One thing I'd also add to that is one thing I experienced with my business is I just didn't know what I needed. So there were certain times where I was like, well, I think I need this. And then I realized I didn't need it. So don't beat yourself up over it. If you feel like when you're first starting, you just are trying out different things. That goes with people too. You have to be very cautious and treat them well at the same time. But sometimes they're just not, you're not going to know they're not a good fit until you try it.
No, I think that's a great piece of advice as well. So now shifting gears just a little bit to another area that you guys hit on, which is, setting up a virtual business and maybe a little bit of how to do it. And I know that, you guys offer, fractional services such as fractional CFO, and, that one, it can be a great opportunity. And I think people look at it with, okay, if it's a virtual business, I can work wherever I want. I can, bring people on in a wider talent base, and they look at all of the benefits of it. But I think there are also some I don't know, issues, but things that you have to address or understand that it is different when you're working with a virtual business versus how you're doing it in office and the different things. So kind of as if you're talking to somebody that's trying to think about maybe either transitioning or shifting their business more over to be virtual or just out of the chute going to a virtual business, thoughts on how to or get that set up or how to get going on it?
Yeah, I think the number one thing is understanding the channels of communication and setting expectations for how people are going to communicate. So there's the more technical side of, so for my business, we use Slack primarily for communication between our employees, and then email for our clients. So we've set those expectations. We also have a text and phone option as well for clients. So that's one thing that we've done in terms of just like, hey, this is how we're going to communicate. But then there's also the human side of just being a much better communicator and taking the time to make sure that everyone is on the same page and understands. And so it's a lot of clarifying expectations, understanding that a Slack message might get misinterpreted. And so always having the open lines of, hey, we just need to jump on a Zoom call for this to kind of handle it. So one good example is we're implementing a new software right now for our clients, a full financial FP&A software. And so as we're working through it as a team, what we are doing is these bigger working sessions where we're just on Zoom together, kind of doing the same work so we can ask questions and learn together as if we are kind of in an office working side by side. So we've kind of developed, well, what works as a working session and what we just not need meetings for. And setting those expectations up front prevents a lot of miscommunication in the future.
No, makes sense. Now, maybe just to follow along that and shifting or, to the other side, which is I think when you oftentimes are virtual, there's sometimes it's customers or clients may have a hesitancy. So in other words, especially when you're getting into finances, CFO, people helping to run the finances or taxes or having access to money and all those type of things, they tend to say, well, if I've never even met the person in face to face, or I never, actually sit down, or I don't even know if they have an office or if they're located where they say they are, it just kind of tends to create that a bit more hesitancy versus, hey, I've at least been in their office, can tell to a degree that they may be more legitimate. When you're looking at setting up a virtual office, how do you kind of address those concerns from the client perspective?
Yeah, I think timing wise, I'm going to use the word luck. I hit it mid-COVID, so everyone was expecting that, so it worked fairly well. But as I think through the future, that's not going to always work. And so to mitigate that, I will probably be traveling a lot more this year to meet potential clients or existing clients in person. I live in Seattle. I have a few clients in Seattle that I've made a point of connecting with. Not everybody has a different comfort level with it. So it's really just making sure that first, are we aligned as a client service provider relationship? And then if they do need that extra level, then seeing it where that makes sense to provide that in-person support. The other thing is I've worked just really hard on getting out what is our message and what do we care about and what's our mission. So that's on our website. And also I have a LinkedIn profile so that there is this online presence that is more robust. And that I think is also another good way to provide trust for your clients. The other thing is because we're finance and not bookkeeping and accounting in terms of the financial information, I purposely do not have access to anyone's bank accounts. And that's one of our policies. And we do that specifically just for de-risking and then ensuring that. So while I see all the financials, I can't do anything with those financials other than receive the information and make strategic decisions. I think that's mainly where it is. I feel like there's one other thing that I might come back to if I remember it.
Oh, I think that's a great thought. And one of the things maybe to add on to that, I think that when you are virtual, one thing it definitely helps to be in the COVID time frame where everybody was kind of forced to do that, and you're saying, okay, people I think had the opportunity or were forced to just take a step back and say, does it really matter if I go to someone's downtown office one time in order to establish that, and does it really doesn't really matter as far as the services that they're providing, but I think that you can still go the extra way to establish that, kind of that foundation of trust. Much as you said with your team, you're on Slack, you're making that communication. I think you can also make yourself pretty available and open to people that are your clients. And that can be whether it's, again, Zoom meetings, phone calls, emails, being responsive, letting them know how it's set up, how how you safeguard things, and kind of having that extra layer of transparency and communication, I think also seems to help people to overcome maybe that initial fear.
Yeah, absolutely.
So now shifting gears just once again, just because there's lots of fun topics to hit on. But one of the other things I think, especially, if you don't have a finance background, or maybe dislike finance, or you haven't had the opportunity to gain the experience, there's different things that you get nervous with, and one of them is the simple just language of finance. In other words, whether it's an ROI and return on investment, that makes sense once you learn what it is. But people throw around acronyms, you throw around different things, you throw around what are all these things, and it tends to be overwhelming and tends to make people just almost shut down or just not want to even deal with it, which not dealing with the problem or not dealing with a part of your business isn't a good idea, but it still is kind of where it sometimes direct people. So how do you go about either learning the language or simplifying the language or addressing that so that people feel like they can actually approach doing finances, or at least are understanding it? If they're bringing someone on that is doing it, helping them manage, you should still know what's going on through finance. So how do you kind of break down that language barrier?
Yeah. So one thing I'm working on this year is I launched a blog called Finance Fight Club, and it's a weekly newsletter, and it is where I'm trying to do exactly that, where I'm trying to take something that's a little more complex that maybe someone has heard of and either tell that to them in a different way, or even I think we'll get clear throughout the year as I kind of get used to this new thing of taking a term and then breaking it down and saying like, okay, gross revenue can be called total sales, total income, sales, what is it, and what are you what's the difference between that and net income and net profit and net, so trying to just really clarify and breaking it down. And then with my clients is when they ask for a number, so sometimes they might come to me and say, I want, let's say, net profit. Well, I might translate that one way. I think I did this with a client where I gave them the wrong number because I just flipped it to another type of term. So one thing I do is clarify, well, what do you mean by that number? And what is the goal that you want to achieve with that number so that we're both on the same page? And then really telling the story of the financials and trying not to use the over technical language. So, I may use a certain term that's common to me when I talk to other finance people, but I don't try to avoid that with clients unless they're very comfortable with those terms. And then the other piece of it too is we have several clients that are venture backed, and so they have quarterly board reports. So if we're doing a board report or anything, we clarify the definition and how we got to that number in somewhere in there so that it's very, very clear what that number means.
No, and I think that, there's a lot of things, breaking it down, maybe using different terminology, helping them to understand it. Sometimes it's just, you have to take the time to explain it to them because there isn't a good way to break it down other than just garnering that understanding. But I think that, and I work in a field that's probably guilty of the same thing. When you get any time in the legal field, oftentimes attorneys like to use legalistic terms, and they'll try and, to a degree, at least my feel of it is sometimes it makes you feel smarter because, hey, if I can use these larger words that are specific to the industry, it represents that I'm knowledgeable, that that I'm doing my job well, that I know what I'm doing, that I have experience. And yet, on the other hand, if you were to put yourself in their position, they're just trying to understand it. And as you said, if you're going to pitch a venture capitalist, or you're trying to go and explain your business, all you're really trying to do is get a good enough understanding that you can show what's going on, and they don't care about the big language. And just because you think it shows that you know what you're doing, I think it oftentimes has the opposite kind of frustration.
Yes. Yeah. I definitely take the attitude of I'm not trying to sound smart. I'm just trying to help my clients understand their business and make good decisions. So it doesn't matter what term we use as long as we're on the same page. Then we can go forward and use whatever term, whether it's technical or not.
I think that's a great way to approach it. So Now, one of the other things that we talked about was kind of, and I think they go hand in glove a bit, but when you're looking at finances or analyzing things or taking a look at it as a whole for the business, one is to look at the finances as a whole as opposed to just individual parts or pieces, and also kind of apply maybe a bit of strategic thinking. So if you're to take a step back and to say, if you're a business and maybe you're not quite sure where you're supposed to be doing with your finances or what's important, or, what is the areas that you should be focused on, any thoughts or tips as to maybe how to start to break that down or approach it as a startup or a small business?
Yeah, I think there's the first thing I would think about if you are really early is what are your personal income goals? So I think this is kind of overlooked a lot when people are really new to starting a business. And so they might expect that this business is going to turn over some sort of profit very, very quickly, and they'll be able to take a lot of income out of it. And so sometimes it's just kind of overlooked, and then people end up not paying themselves for 2 to 3 years and getting really frustrated. So I look at that first and say, what are you trying to accomplish for your personal life before you start this business? And if they haven't addressed that, then we kind of start there. But then the second piece, let's say that's all clear, is what industry are you in and what's typical for that industry in terms of being able to become profitable over what period of time. So if you are a general contracting company, depending on your market, that should be pretty quick, as long as you're kind of managing your materials and bidding correctly. And then for, like my professional services, like my business, should be incredibly quick because I basically have no startup costs. But then there's other businesses like a technology company where, okay, maybe you do need to build something that's 150 to 250,000. That might take a little bit of time to build and then time to get income in. And then it also depends on who are you selling to. Are you selling to businesses? They tend to give you a larger amount at one time, but it might take longer to sell. If you are selling to consumers, so just an individual, they might purchase quickly, but you have to get a larger volume of people looking at your product. So you really have to understand that industry and what's expected in that industry. And then setting those expectations sets you up in the long run of really knowing if you're being successful or not.
No, I think that's definitely makes sense. And one thing I'd probably add to that is sometimes, you go out and you think, well, the reason I'm going to go do a startup or small business is to make more money or to be, more wealthy. And that's not a bad goal. And if that's where you're headed, definitely can provide that opportunity. But I think also sometimes it's the big picture is I may not make as much, but I'll have more time to relax or not work as hard or have more time with the family or be able to travel more or whatever those are. And factoring that into your financial situation, I think, is oftentimes something that often gets overlooked, but can have a big impact as well.
Yeah, absolutely. That is, a big thing that's coming. That's very, I would say, new within the last 5 to 10 years, maybe, of people being kind of one person operations so that they have this flexibility, which I think is amazing. On the flip side, I think sometimes people get back into running a business and feeling employed and owned by the business. And so again, it goes back to setting those goals and what do you want? I really wanted to run a business. And so I'm taking that to heart. So I work full time, but I could easily work half as much and make a really good income and not have any employees. And so I think knowing your goals and then setting up your life and then fitting the business into your life is a really good way to go.
Yeah, couldn't agree more. So, well, as we're already, covered a lot of things. There are a lot more things that we could chat through and make for a great conversation, but we are running up towards the end of the podcast. And so we're going to jump to the question I always like to ask at the end of each interview. So that is, within your industry, what is the biggest myth and why is it wrong?
Okay, I'm going to go with this one, which is finance requires a huge amount of math and understanding of math. And I think that is 100% incorrect. I maybe do math 3 times a week. I have Excel that does math for me. All of my work is thinking through a business, understanding all the components that come together and giving decision support to clients, to CEOs, and helping them guide them in their decision making. And so I think when I was in 6th grade, I failed a placement test for math. So I ended up in advanced math because my mom knew I was bad at test taking. But at the same time, I was never this math genius. So you can't, I think people correlate that and then they just shut down. And I think when you see the kind of creative side of it, it just becomes a much more approachable industry.
No, I think that makes perfect sense. And I think that, that's a lot of times you have a misconception. Hey, I've got to, I even see that with, with business in general. I don't have an MBA, or I don't have the pedigree or the background or the skill set. And oftentimes if you would spend a bit of time learning to understand it, as you said, there are a lot of tools out there. There are things that can make it easier to do finance. There's a lot of people out there. And if you go hire a fractional CFO or have people to step in and can help you to explain that, I think there's a lot of reasons why those excuses that you often make really are just more myths rather than truisms in the industry.
Mm-hmm.
Well, as we wrap up the episode, if people want to reach out to you, they want to be a customer, they want to be a client, they want to be an employee, they want to be an investor, they want to be your next best friend, any or all of the above, what's the best way to reach out to you, contact you, find out more?
Yeah, they can email me directly at Natalie@copper8strategies.com. They can find me on our website, copper8strategies.com. You can find me on financefightclub.com, and they can find me on LinkedIn, Natalie Cook.
Awesome. Well, I definitely encourage people to reach out, make great connections. If nothing else, make a new best friend. So with that, thank you again, Natalie, for coming on the podcast. It's been fun. It's been a pleasure. Now, for all of you businesses are out there, if you can help us to share all this expertise with even more startups and small businesses, just go click on share, subscribe, and leave us a review. Make sure that we can share all of this great expertise. And on that note, if you ever need help with your startup, your small business for patents, trademarks, or anything else, just go to strategymeeting.com, grab some time with us to chat. We're always here to help. Well, thank you again, Natalie, for coming on the podcast, and wish the next leg of your journey even better than the last.
Thank you so much.